that shows is that whatever orders were left there have now been mitigated, absorbed, and are now holding each other up because it's worthless. There's opportunities every single day and the market will continue doing the same things. Many people don't understand that. Many people get into the market as fast as they can. They just need I'll learn to back test later. I'll learn to do the process later. I can call you up. Listen, Billy, I got a 95% winning strategy, win rate, 95%. All you have to do, all right? Oh my kumbaya, I'm gonna fucking miss my trade. I must react to price. I must react to price. Whatever it does, every day is a new day. It's crazy. No.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
These opportunities like the one you see right in front of me today, this is a trade that I personally took today. Let me work my way down so you can see it better. This is a trade I took today. It's a very simple trade. I entered it as a buy stop above some of the highs here. We will walk through this exact trade and the confirmation in a second. Okay. Took the buy on this at 2.5 RR. I took off 80% of this position. That secured me 2 RR in my position. I got stopped out on a trail. I trailed using the 15-minute. A trail to this low of this up candle. We're going to go over that in a short second right now. And that was my entire trade. And this kind of trade is a trade philosophy and criteria if applied to 30-minute, 1 hour, 4 hour, 8 hour, daily, weekly, monthly, whatever it is that you choose to trade. And to any market, Tesla, Bitcoin, cryptos, walrus teeth, watches, right? I'm actually buying a watch right now because I looked at the charts of what I suspect watches could be valued at, and I'm looking at a very long-term thing, so I bought a pretty nice watch, okay? You don't see it on me though, so we're not flexing anything. But today we're going to show you guys a confirmation that you can use on any of these time frames within the realm of the 3-box system or within the realm of context. How do you get to a point of context? You look for the 3-box system across time frames to understand where you are and where you're likely heading, and you use that to analyze and go forward with the market. So we've been very bullish on EU for a while now. I've made a few videos about it. I made a few videos about how I was going bullish from here to come and take out this high and this high right here. Speaking about how most of dumb money is always going to be looking for sells across any of these points here. I'm not going to reiterate that, but the striped pajama fallacy leading people to make poor decisions. If you're brand new to this, by the way, please go back and see my other videos. But very quickly, the striped pajama fallacy is the idea that if you close a chart and you draw random lines, close your eyes, and you draw random lines absolutely anywhere, eventually they will, every single one of them, will have some kind of reason for support resistance, hitting it or not hitting it. Okay, so the idea of drawing lines to predict prices or to trade prices is not necessarily something that is actually teaching you anything. So when you see somebody teaching you to draw every single zone you can possibly find, this one, this one, this one, you know, this one, and this one, yeah, eventually one's going to get hit and it's going to look like it did something. But in reality, you have no idea about why you're looking at the zones you're looking at. You have no clue what the likelihood of the delivery of price could be. And then in the case that price is delivering, you don't know how to now follow that potential trend because in your mind, at this point of thought process of the striped pajama fallacy, your basic foundational understanding of the market is that the market can turn around at any given point, right? The idea of basic support resistance, aka having zones everywhere, is that no matter where you get a trade, you have no idea if that's the turning point or not the turning point because it might be a small bounce, a big bounce, nobody knows. And you have no clue what you can expect next. So I teach people not to think in the striped pajama fallacy, and I teach them to think in multi-time frame 3-box confluence. And once you have an idea about where price is heading, you can use lower time frame 3 boxes now to create optimal opportunities of money to be made. And what I mean by that is in this kind of opportunity here, where you know this high is the high you want to see delivered, your invalidation point basically becomes this, right? So this is what you could make this like red. So this is basically a move below this would make this invalidated, right? You can make it a little bit bigger to account for absorption below this low, right? And then the upside is this and potentially onwards, right? So the upside is guaranteed as per if the context is delivering to be this plus a potential runner that could be close to infinite, but we know it's not, so we can just make it a little bit larger. Maybe something like this, okay? We just assume like a decent run on this. So this is what markets move like. So when we have a way to establish 3-box contexts, right? What we're actually doing is we're establishing points of basically we establish, even though we don't know if price is going to go up or down, what we do is we establish a context for where we know price is heading. And in the case that we get certain 3-box setups, like this one you see in front of you right now on this screen, you have a point of invalidation. And then what this green area above it becomes, and I teach this in the private mentorship, it is what we call the free money zone. And by that, we mean that in the case that price does begin its move and you have your confirmation, you begin to trade it, the upside potential is significantly higher than the downside invalidation, which means instantly, as you're taking trades in a given direction here, you're already executing upon edge. And now you don't need price to run here or here to make money. You only sometimes need price to run up to here, because by the time you're getting your actual entry within this potential point, your trade might become something along these lines, right? Which means that now your invalidation point falls into just being about this size, because that's where you're now in the trade, right? And then your upside, once again, is still the same, but now if you even secure money here, you've still made a positive RR. So this is the way you want to kind of start to think about trading. The way you want to analyze markets, so when you conduct your analysis, is you want to get to a point where you have a clear free money zone above you with a smaller invalidation. So what I mean by that is in this case where we have a bullish bias, right? Price has made some kind of bullish area or a bullish 3-box, thereby making a clear invalidation and a clear upside potential. You've created an area where, you know, if you're wrong, it's like a 30% wrong, and then up here is like a 60% of being correct, and then you have onwards, which makes this number even bigger and this number even smaller, right? Which basically means that your confidence or your the potential for, if this plays out, the potential for it to play out has a bigger upside reward, so that when you get involved on future 3-boxes within here, as you need to, or within just mini areas here with a smaller stop or whatever it might be, you actually create almost unlimited upside potential and a very small downside potential, which means that if it loses, it loses, and that's fine. But because you have an orchestrated context about what you're looking for, that's where money is going to be made. So now let me show you a real example of that so it doesn't get too confusing. Okay, but this is why it's so important to get to a point where you actually have a way to create a story about price. So let's put this into real practical terms for my actual week right here and go over everything that happened. So because this is now playing out and has played out, I'm going to quickly break down the reasoning for this specific bias, because I've been talking about this forever in the mentorship. So here's some free value for a lot of you that are watching right now, okay? So this all started with the daily, and as we all know, for the last few months on this channel, I've been bearish on this market ever since somewhere around here. And we've been very bearish on this market. It has undergone multiple redistribution models, and as it begun to break right here, as this displacement occurred, and by the way, for any of you that are new and looking at this indicator on here, this is called the mentfx structure indicator. This is how I personally view structure. You can find it for free on TradingView for mentfx structure. You can go and throw that on your chart. This is how I view structure using the last up moves before the down moves. And furthermore, on mentfx.com, I'll be building out a screener for the private members to be able to screen through many markets and be able to figure out where they are in a context very quickly. So stay tuned for that. It's going to be really cool. Nonetheless, when this break occurred here, I was in a 50-50 zone, or a 50-50 uncertainty area. I knew price could come down into some zones here. I knew price could come up. I had no idea. All I knew is that price was generally likely to accumulate and begin a very large up move to the top side. I made this available to you guys publicly, and privately I do this every single week, and I talk about this every week for the reasoning as to why. So this has all been documented, and I don't need to prove myself to you, but I'm doing this to showcase to you that, you know, nothing is new in this market, and we do this week after week after week. Okay, so after this break, I actually was uncertain about the market, and this was around like about November, just heading into basically the end of the year. And at this point, I basically got off the charts, and I hadn't touched the charts until around these prices here. So I actually waited quite a while, and we had a multiple leg or multiple structure leg extension to the top side, which put us into the likelihood of a reaccumulation model, as I teach in the Prime Mentorship. And that's exactly what this price action here is. A breakdown that's making bearish price action that we're already expecting to be bullish. For any of you that have watched my YouTube channel from the very beginning publicly, this is the idea of basic Elliot fractals or basic structure fractals or Dow fractals, where trends will undergo. Now they may break down, but they are part of undergoing bigger trends. This is the idea of 1, 2, and then the continuation, where the smaller time frame trend becomes a part of the larger time frame trend. And if you understand cross time frame analysis, you understand what your actual high or what high you actually want to work towards. So even when you get breakdowns, you're not stuck looking at every supply zone. You're instead focused on the up moves that take continuations higher. That's the exact same example I provided to you guys with this little drawing here at the beginning. And that's the same example you see here today, where we had these breakdowns. And all I did at that point is I asked myself, is there a context or a 3-box that pertains to a clear setup that could continue this move higher? So that's when I switched to actually a 3-day at this point. And what you'll see here, so I'm going to get rid of the structure here, but you can see it as well with the structure, is that we had a break to the top side right here, right on the 3-day. Then we had a pull back, a break up, a pull back, and a break up. So we had a few breaks up, and what we actually did from this break is we actually, if you follow the price here, all of the price was mitigated. You can see there's no left unmitigated price action. All mitigated, 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 and then it moved away. So when it broke this and had mitigated all the price action, what that shows is that whatever orders were left there have now been mitigated, absorbed, and are now holding each other up. So basically what happens at that point is this becomes a very, very strong protected low, as does basically all the price action in here. This is all mitigated price action that's holding longs. And currently, if you take a look at this, the current range we exist in, if I very quickly just change this color so it doesn't get too confusing. If I make this like a purple and I make it a little bit fatter, the current range we exist in, as you can see, is that you have this low shown by this purple big line and this high shown by this purple big line, which is a bullish range. You have a bullish range from this low to this high. That's the beginning of a 3-box. There's nothing more here. It's a very basic 3-box, a bullish 3-box. You have S, S, C that we're looking for. Nothing has ever changed. And now what we can do is we can take that further and ask ourselves, where's the second part of it? So we have S, which is this to this. That's the structure. Then we want to look for S, which is SND. Where is this move coming from? Well, the last down move before the up move, which turns out to be this area here, right? The last big down move before the up move. Now, for those of you that have studied me for a while, this zone is very large in relation to the structure that it's supporting. And if I am to confirm it right here, so if I start looking for C here, I mean, it could work, but I'd have to either look for it on a very high time frame because I'd have to be wrong less, or if I did go down to a lower time frame like a 4-hour, a 1-hour, or a 1 minute, what do you think would happen in all of these zones? Well, I would take significantly more losses because now I'd be confirming much smaller price action in all these areas, which means it could be undergoing accumulation for a long time, which means all of this could be losses. So we need to be aware of that. So we can do one of two things. We could either confirm with a higher time frame, or we could refine our zone to be smaller. At the same time, think back to what we spoke about just now regarding this idea of approach. If we were to use this as the supply zone, as the demand zone, what have we done? Well, we've made our point of invalidation from here to basically just under this low, and this becomes our invalidation, right? So this is where, all of this could become price trades into, and then it goes below this, at which point we're now considering the bias of the 3-box broken. And then the upside, right, would be, again, up to this high, which is the high of the range where liquidity is resting above, and then potentially a little bit higher due to the fact that we can get easy runs, right? This is what happened with UJ last year. This is what happened on EU to the downside last year as well, that we all spoke about on this channel as well. So again, if you're new, please make sure you've seen all my public stuff. And then again, if you want to go much deeper and get into crazy confirmations, a lot of depth, breakdowns every single week, outlooks, exactly what I'm looking at, get this live before it happens to see exactly what I'm talking about. This is because, again, in my private, I've discussed this before price was ever here. I discussed this but when price was up here. And now it's all playing out, and it's playing out perfectly, and we've been following this all week long. Our members have been following it. A lot of people have taken beautiful longs this week. I mean, we do this every week. You guys can pause this as I kind of scroll through it, but many people took longs today. I personally took a long today, even spoke about it, beautiful delivery week after week, exactly what we were looking for. Had my personal really good trade, sent this out this morning actually, right? Longs, still looking for them. The exact area I was looking for longs from, remember this right here, and the actual long I got into as price now taps into that and starts going. And that's exactly what we're looking for. And here's where price is now in reference to that exact same bias, right? Delivering. Now, I already managed myself on this and I'm out, but that's fine. We're going to go over that today as well, because today is going to be a banger for all of you. So again, if we're using this S&D zone, this is what's true about our market, right? We now have this green, let's ignore it for now. Yes, price can keep going here. That's how trending markets work. But we're going to look at the actual the actual high as a liquidity point that we're targeting. So really, if you look at this, we put ourselves in a 50-50 area of invalidation or confirmation, right? Which means that if we begin to confirm at this S&D, we have basically a half and half of going in one direction or the other, right? So even if we get positioned, the upside isn't as good as the potential invalidation side, which means that we could be taking multiple entries within the invalidation side, and it could all still be losses and might not be worth it because the upside is the same as the downside. So instead, what we do to curb that is, because we know opportunities exist every day. Multi-million to billion-dollar opportunity exists every single day. So we're not worried about missing trades or missing trends. As people that learn the mentfx methodology, we don't give a shit where price is or what it's done. It could go up 3,000 pips, it could go up 30 pips. It doesn't affect us. We don't care if price is left without us or isn't pulling back or all this nonsense that a lot of dumb money wants to focus on, because it's worthless. There's opportunities every single day and the market will continue doing the same things. Many people don't understand that. Many people get into the market as fast as they can. They gotta get on, and they don't want to test their systems because they're gonna miss the trades that are available right now, like this beautiful trade that's gonna deliver to this high, and then there's never gonna be a bias ever again. And those people are gonna lose for the rest of their lives, guaranteed. Okay? So we don't play that game. We play the game of finding optimal scenarios and then following those optimal scenarios if they deliver. And then if they deliver, well then within that delivery, because your invalidation zone becomes so small and your profit zone becomes, or free money zone becomes so large, you have basically opportunity, infinite opportunity for a lot of money to be made, and you can scale down and start to follow those as you wish throughout whatever timeframes you wish to follow that through on. Infinite opportunities in this market every single day. Do not be the dumb person that thinks that because the market has started to bounce at some random area that you're going to miss the biggest move ever. It's worthless to you. It's worthless to your development. It's worthless to you building generational wealth. It's worthless to your actual system and consistency. So get rid of it and focus on the shit that works, okay? Now, that said, when we went through the 3-day, we found that this is the range that we're working with. And during the time, we were back inside of this price action somewhere here. So we knew we were already in this, but we weren't going to look at it because this is the truth behind the potential upside for the potential downside of invalidation that could occur right now. So we refined a little bit further, and we refined to the wick because that's its own unmitigated zone on a lower time frame, the wick before the move up. And I've taught this multiple times on my public YouTube as well as in my private. If you want the specific rules, it's all in the private. However, I then went a little bit further. I went to the daily and took a look at it again and wanted to refine it further. On the daily, it actually gets refined to either this large last unmitigated point or this last wick, okay? Either one is fine. So what I did is I took a look at this wick and I went down to a 4-hour to see where I was. On the 4-hour, as we take a look at this, you can see that this actually, whatever this wick was, got mitigated by this next wick. So this is where your preference comes in, but you could go for this zone right here, just like that, taking into account this last unmitigated plus the wick of the higher time frame, or, which is what I did, you could go for the last unmitigated candle in this entire move. So now what you've done is you've refined to a general area that makes the most sense from an unmitigated perspective, and this is the area I actually refined to for my team. This is the exact area I shared, spoke about, gave the full reasoning behind before it happened, for you crazy motherfuckers out there, before, aka when price hadn't been at the zone, before, when price was somewhere here, before it came there, I gave and shared the analysis, the reasoning behind, and showed the exact reasoning to the refinement of why this is the exact zone I personally would be using to play out this bias if price got here. So that means, okay, one, it happened not in hindsight, okay? Let's make sure we understand that. Number two, if price began to go long, there's a likelihood that I would have not watched EU while it did this. I would have stepped away and let it do its thing unless a very clean 3-box presented itself on a lower time frame. But otherwise, I'd be willing to sit out of this price action and allow it to deliver without me. Because again, repeat after me, there are multiple million and billion dollar opportunities present in this market across multiple markets, across multiple time frames, any markets, every single day. Which means if you're attached to needing to be in a move because the candle is making a green candle the size of a skyscraper and it wasn't in your prediction, you're gonna fucking lose everything. It's nonsense, okay? If that happens, you walk away. It doesn't matter. I don't care if here price went to 3,000 pips up. It wouldn't change the way I approach this because I have a set philosophy as to what I'm looking for, the kind of zones I'm willing to trade, where my confidence interval has increased from maybe a 50-50 to over a 1 to 10, and not so basically aka 90% confidence interval. And in the case of that confidence interval now begins to deliver, I can follow lower time frame bursts and setups using this confirmation that I'm gonna teach you today to do whatever I want and get involved in any areas. However, in the case that that doesn't happen, I know how I can walk away. And many traders will fail for the rest of their lives because they don't understand that they need to learn to walk away. And what's funny is many people that start out trading think that they need to learn the system first and then the psychology. Oh, I'll learn to walk away later. I'll learn to backtest later. I'll learn to do the process later. But what they don't realize is the strategy makes up 30% of your system, and then 60% of your system is the experience and the psychology of it. Pretty much. The strategy can be important, but it doesn't matter. I can provide you right now. I can call you up. Listen, Billy, I got a 95% winning strategy, win rate, 95%. All you have to do, all right, follow these little rules. You follow these rules, it's 95% win rate. You're gonna do really well. 1-to-1 RR every time. You're gonna actually make endless amounts of money. Okay, Billy, you got that? Yes, Mr. Ment, I got it. Yeah. Here I go. And you're on there, and you're waiting for the rules. Okay, rule met. Oh, this rule's not met. It's telling me I need to take a buy, but one rule isn't met, so maybe I shouldn't take a buy. And then the candle becomes a little house. Well, the last rule isn't met, so I shouldn't. Becomes a little tidal wave. He gave me the rules. It's not met, but it's going in the a skyscraper. Well, the rule's not met, but price is going up. I basically given up over $200,000 already just by not taking this. Mount Everest size candle. Pull the trigger. Pull the trigger. Where's it going? Why is it going against me? But Mr. Ment, you told me it's a 95% win rate strategy. Well, sure it was, but here are the rules, the formula that's given to you. Did you follow that formula? Yes, but it started going, and I can't do it. The psychology. You need to teach me It's like, you have the rules. Why are you not executing the rules that are going to make you money? Why are you doing the things that aren't going to make you money? But the Mount Everest. Don't trade. So, lock out of this. I hope what I just did goes through your mind every single time you make an analysis and then price begins to skyscraper away from you. Instead of sitting there going, oh my kumbaya, I'm gonna fucking miss my trade. Go, there's nothing until this alert goes off. If this high gets hit and gets a new range, I will work with the new ranges in the case that the context is built and is good. That's it. That's all your mind needs to do. If your mind can't do that, you might not be cut out for this. But at the same time, if you haven't ever tried to train your mind to do that because you're more focused on the holy grail rather than the things that actually matter, the 30 and the 10% of the stuff that actually matters, well, try and train on the things that are actually going to make you profitable rather than this like dumb mentality of, as we like to call it, basically heroin hooked, needing the next move, needing it at all times. Okay, so hopefully we understood where this came from and that it didn't come from nowhere, okay? That's the zone I used. Why didn't I use the bigger one? Because I want to have a confidence interval as high as possible before I ever get involved. So what I've done by simply refining this zone that we just showed you to the 4-hour zone that was clear to me that I shared before it ever happened within this 3-day range from this low to this high, by now refining to this zone, what I've done is I've taken this invalidation potential where I'd be looking for trades and made it this, okay? And at the same time, I've taken the upside, aka what we call the free money zone, from there to this top side and potentially onwards if we get the runner. This is what I've done with it, which means now, and again, this is not even my trade yet. I'm not entering here and this is my stop. This is just my confidence and context. contextually, if price comes here and begins to go long, right, I've put myself in an area where my invalidation zone is about 20% going to be wrong 20% of the time. And if I'm right, it's going to be 80%. Like basically confidence is going to be at all-time highs on Mount Everest level levels if we begin to make the move, which means that if I then take a trade in any given week or day or hour of this contextual delivery, I know that my trade carries a lot of weight, carries analysis behind it, carries a clear bias and context, and as a result, I can easily trade it rather than getting all screwed over with the psychology of having bigger zones that now I have to confirm more times in, and then that makes my confidence interval 50-50, and instead, my confidence interval has now changed to a much more drastic and higher level. And then, as price comes into that zone, that's when I began to follow my longs. And again, guys, we're going to shill my mentorship one time here, and then we're going to continue with the education. I'm going to stop talking about the mentorship until the rest of this video. If you do not understand that these things are shared before they ever occur, I ask you to click the link below, mentfx.com. Join up for 1 month. It's $100. Click the join up, and then instantly cancel so you don't get charged next month. I don't want you to stay on if you don't want to stay on. Join up for that month. During that month, watch the webinars starting around February until March. Just watch those webinars. Since you might not be interested in learning all the stuff I teach in the mentorship, just watch the webinars where I undergo the outlook every single week and discuss exactly what I'm expecting, how I'm going to look for it, the trades I'm looking for, and then as those weeks go on and we start to get the mitigation from the zone I'm looking at, from the 3 box to deliver to the next high as part of my confidence interval, the exact trades I'm taking, the management behind them, why I'm taking them, and you're going to notice that nothing ever changes. Everything stays the same. The rules stay the same. I don't come into the market every day. Here we go. I wonder if I'm going to be long or short or wavy. There's no such thing. I know what I'm looking for in that day as I show up to the day. If I don't get what I'm looking for, I walk away. I don't need to be wavy or flexible. I don't need to be in this mindset of, I must react to price. I must react to price. Whatever it does, every day is a new day. It's crazy. No, the bias and the context has held on this market for months now. I've been doing and saying the same thing forever. It's been doing the exact thing that we've discussed forever. Now that it's delivering in context to what we look for, we are getting some of the best trades of the year. That is how it works. You wait for the things that you're expecting to occur when they are occurring, and now your confidence interval, which is happening currently because you see how the price has not invalidated the point of invalidation and is now moving in correlation with the area I expect it to move up into. That's upping my confidence, which means it's in the bias for me to be a trader. And notice how I'm not sitting there going, I gotta be a seller at all my zones. Here I go. Stripe pajama fallacy. I wonder which one it's gonna hit. I have a specific thing I'm looking for and have a specific high I'm looking for price to deliver to, and then potentially onwards if it wants to create a long-term trend, okay? So what I ask is that you join up for a month, you watch the webinars starting around, let's say, January, February, so you know that I've pinpointed this way before it ever happened, and you see the reasoning for pinpointing it, and then you're gonna see every trade broken down as we followed this move up to the highs, every trade I took, why I took it, why the confidence was there, how I took it, and how everything stayed the same and how I managed it. It's all there, and it's all there prior. So going forward, anything you hear me talk about today regarding trades that I took, regarding stuff that I might have looked for, these aren't all hindsight things that I came up with to talk about today. It's stuff that I have spoken about for over, well, since every webinar we have is about 2 hours, about an hour to 2 hours long, usually 3 hours sometimes. So starting in February, right? We said February, around here, February. Starting in February, how many Sundays have we had? We've had about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So far we've had 10 webinars since price was here, which means, okay, 10 webinars, all at about 2 hours average, but more like a little bit higher, but it's fine. There's about 20 hours of private content that you have access to right now if you join up for just a one-time payment, and then you can cancel if you want to, and then you'll be out of it after 30 days. But you can see this 20 hours where you can see me exactly break down these exact moves, why I took them, and then follow that up to see exactly how we followed these. So anything you hear me say today now regarding the zones we were looking at are not hindsight. It's all recorded. It's in the private domain. It's all available there before it ever happened. So hopefully you understand that. And that said, it doesn't even matter, because most of this is application, showing you application that you can now go and apply yourself. But the point being is, if you're one of those people that are like, well, he's not showing me this live, why isn't he making a little YouTube video telling me exactly where it's going live? Well, first of all, I am. I'm telling you that my expectation still lies with the fact that we're going to this high, and I've spoken about that for a while, and then potentially, hopefully, onwards, we might get a breakdown before that, but that's private mentorship territory. Why is he never making a video and showing me? Well, first of all, my most recent video was a full breakdown of an actual trade live, recorded, and shown to you with this exact bias when price was down in these areas here, and I showed you a long I took off it, I think over here. So watch the video before this one, and you're going to get some of that. But again, I hope that a lot of you see this for what it is, the value that I'm trying to provide to you. Join up with the private, watch it, watch those during that time. You can even go before and see all the stuff that I've done before, and see how I'm not making this shit up. It's not all hindsight. It's all been done beforehand. I don't have to say anything more on that. I hope that helps some of you guys. Let's keep going. So those are the longs that I am now personally looking for. This is the range we're working with, the 3-day range from this low to this high. I've refined it to create this as my basically confident zone, and then we begin to follow it from there. And now throughout the weeks, okay, throughout the last few weeks, as price began these accumulations up, we began to follow some longs here. We took longs as a team inside of here on this way up. I took a long here that I actually showcased to you guys live in the previous video, so check that video out. So took those longs. Price continued going up, beautiful. We traded from here, I believe, as a mentorship to the next highs. We took out those highs, then price failed back down, during which point we ignored price until it came back into the zone that we were looking for longs from. Price began an accumulation. We followed some longs there, but it was a really weird week. Price action on lower timeframes wasn't that clear. Price began to break and gap up. I wasn't able to follow anything here, so I was ignoring price around these areas. Price re-broke back down again. I think this was on some red news. It doesn't really matter what it was on, though, because again, it's still following the exact things we were looking for. It taps back into the zone we were looking for. From there, public YouTube concept, S&D 2.0, we started following the S&D 2.0s. I followed along and took a long personally inside of here. I took 2 or 3 longs inside of here alone. And again, each one of those, like I talk about, are multi-million, billion, whatever, hundreds of thousands of dollar opportunities that are available to you. And again, this is all perspective based. I hope all of you understand that. And just because I have results personally, and I've had students that have results, this is not indicative that you're going to have results. Remember that, okay? So started following this price long. We followed price long all week long. We followed longs from here as well. Continued long. Came up through this. This was on news yesterday, so I didn't follow it during the news. Kept going, all good. And again, we have the delivery within this contextual approach. So the confidence approach behind this is very, very high, right? There's a lot of confidence that I have behind this. So as I step onto the price action today, right, I take a look at this again. We're delivering bullish. I'm expecting bullish. The trend is already established. I don't need to look for pullbacks. Many people are looking for pullbacks now. Many people want to pull back. They want to pull back. They want to pull back. They want to pull back. It's stupid. Those people are going to be losing endless amounts of capital, and that's fine. That's their prerogative. I'm looking for longs and deliveries long. Why am I looking at this high as my next targets? This is what I sent out today, okay? Let's take a look. So we already know I'm long. Overall, I'm long. Overall, I'm following longs. The longs are delivering. This is the high that I'm aiming for. The high is in front of me. The confidence interval is playing. The bias that I'm looking for is playing. The actual 3 box, in this case, from this low to this high, is now delivering. SSC, S, we're there, C. And now, like I taught in other videos, we are following the C's of this within itself. And what does each C potentially represent? For anyone that's seen my other videos, this is why it's important that you've worked through my videos step by step. Each C can represent its own SSC, which is why I teach the idea of fractals. Because again, what we do is available across all timeframes at all times. So each sees its own representation of a potential SSC, which we can now follow on a lower time frame, which comes back to the original thing. Each one of those are what? multi-million to billion-dollar opportunities, okay? And that's available all throughout here. So what did I do today? Let's take a look. I'm not going to break down every single trade. Today I only took one trade, but all these trades were broken down in the private mentorship. Again, you have access to those webinars. If you join up, you have access to them. Cancel your sub instantly. If you love what you've learned and you're like, holy shit, this is not hindsight. He's using the same tools every single week, and now I'm learning those tools, and I have the depth behind the tools. Maybe I should stay on. And you're going to really quickly understand why we have the caliber and the level of community and members that we have in our current private mentorship, and why that caliber continues to grow, evolve. The members there, insane level of skill for those of them that have gone through the things that I've told them to go through. And it's been a pleasure to watch it. And that's how I've also seen from those members the messages privately of, hey, Ment, I wanted to let you know, a year ago I started with 10K. Now I'm trading about 500K in actual personal capital. Hey, Ment, started about 18, 19 months ago. I'm now managing about $1.2 million with FTMO. Hey, Ment, just want to let you know, et cetera, et cetera, et cetera. I've had multiple messages like that. And it's amazing for you guys. I'm really happy for you. And a lot of you that are even free members have messaged me on Instagram too and just shown me what you've done for yourself. And you've asked me not to share it with the public. So I haven't, out of respect to you, because I know that not every trader, most traders don't want their entire things aired out there. Because again, when you find profitability, you realize that the game isn't about proving yourself to anyone. It's about supporting your family, yourself, and creating wealth for the rest of your life. Right, that's what this is all about. So, nonetheless, we have what we want to follow. We have the highs we want to follow it too. We have this playing out as we need. So, let's take a look at the high I was looking for. There's the high. Notice the structure indicator. Let me throw it back on for you. Notice the high that I have outlined here and why I'm looking for it. Why not this high? Because this is the original high that was created that has not been displaced yet. And that's the high that I want to see price get back above. And that was my main target. So that's why when you see that high on the lower time frame and it looks weird because it doesn't use this little wick here, it's because of this range that we're in. We're in the range from this SSC, from this low to this high. Now, why am I not waiting for price to pull back here? Well, because that's not the context of this market, right? It's not important. What's important is that the market is proving bullishness. It's delivering bullish within the realm of what you were looking for from a bias perspective. And now we're looking for that delivery onwards. So if we have another clear SSC or context of this magnitude inside of it, that's something we can now follow. So now let's look at what I exactly followed this week. So let me get rid of the structure thing. So this high you see here is that 4-hour high. Notice how, yeah, there's other highs, but this is the main high I wanted to see deliver because it's the highest likelihood that if price gets there, it might have a turnaround. But that's the point I want to see liquidated. And it's within the realm of everything else I'm looking for, okay? Step down lower. So today's trade was based on a 15-minute. And today what happened is I'm showing up to trade that I'm looking for longs, which means what in my mind? It means that I'm looking for structure that's long and is delivering long for 3 boxes, or intermediary structures that are 3 boxes that are looking long or want to go long with a clear potential confidence that's already higher that I can then get involved in with good risk management. Let's look at that today. So today I get on the charts and I see this intermediary. That's correct, intermediary, not left to right, intermediary structural break to the top side. Now, even though it's intermediary, it's within the realm of what I'm expecting, which is bullishness. So I want to see that bullishness deliver. Now, just because I see that bullish break does not mean I'm already going bullish on this. So I know that the next high that I want to see price deliver to is the next intermediary high. So again, I'm setting up a multi-time-framed confluence as to where I want to see price head. And at the same time, public, free YouTube mentorship that I've already given, price when it broke this high came back down into the unmitigated point of this 3 box. So S, S, C began to go long. And what do we know about S&Ds? They can build up what we call, and what I teach you guys for free already, S&D 2.0s. So this last unmitigated point, as you can see, it moves away and creates an inefficiency from this high to this low. That inefficiency is once again a representation of unmitigated orders, which means that the S&D, the demand zone below it, is unmitigated. And notice how this was off the last unmitigated portions of the previous unmitigated, making this what we call the S&D 2.0. So once again, what I've done, okay, is I've created an invalidation point. Created an invalidation point with the upside being at least basically up to here, right? But within the realm of what this context is, it's not just this, it's a realm of, one, we have space to get here, but we also have the realm of getting to the actual 4 hour, which is now part of that, within the realm of the expectation of the much higher time frame, which doesn't have to deliver, but can, to be here. So now what we've done, okay, is we've created within a context of expectation that we're already delivering with, where the confidence interval is already extremely high with, we've now reformatted that confidence interval multiple times by way of showing up during our session, by way of following the 3 boxes, and we've created another one within it that has a phenomenal potential RR within it, intertwined. And now what we can do is we can confirm it. And today I'm going to teach you that confirmation that's available absolutely anywhere. It's a little bit weird, so you have to get used to it. It's based on the idea of the triple M, as you see me teach in 2 videos before this one. So some of it's taught there, but a lot more of it is taught in the private mentorship as you work through. But the idea behind it, very simply, so we're going to show you guys what a bullish triple M is, okay? A bullish triple M. The simple explanation, and then you're going to flip this for bearish. A bullish triple M is as simple as this. It's a 2 candle pattern, which we're then going to take and fractalize to help you get involved in any area you want. But the most important thing about this is because we know that it can happen close to anywhere, because of the way the concept works, you need to, like Wyckoff, it's a snowflake, you need to be extremely certain or have a very nice confidence interval behind what you're looking for, so that when you get involved, you know, you have more upside potential, which means that over time, expected value will make you money, okay? So, a bullish triple M. This is what it looks like. A candle of any color. I don't care which color it is. Here it is. This is a candle, okay? Let's just make it black. This is a candle. The only thing a bullish triple M represents, okay, is as simple as this. The next wick is below the previous candle's low, or the previous candle's wick, and the close is anywhere above this high. So very simply, if I go like this, as long as this candle's close, this one right here, is above this wick on the left, this is a triple M. So this candle can close like this, right there, like that, 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 even like this. This is all indicative of a triple M. What it represents is a fractal Wyckoff accumulation in this case, because it's bullish. This is its own spring. This low, as it comes below previous low, the weak to strong hand transfers I teach on this channel, is indicative of a fractal spring. That's a Wyckoff accumulation spring. That is how a triple M functions. This close can be anywhere. Now, again, further questions regarding triple M's are for private mentorship only. I cannot, you guys can comment stuff on it. You can thank me for teaching you it. That's fine. But you cannot go and ask me a ton of questions about this, because it's too much to explain through the free public domain. This is why I've created a private. I'll create a private where I can speak to members, community, give the intricate and depth that I can give, because a lot of you are probably watching this video maybe for the first time you've ever seen mentfx, and it might be very weird, make no sense. But nonetheless, that's what a triple M represents. A bullish one is where the wick goes below the previous wick's low, and the close is anywhere above, okay? Now, what's also true about this is now we can fractalize it. We can fractalize this approach, and then you could basically be involved close to anywhere. So you don't have to always look at one time frame. This is the idea of time frames not existing and orders existing. So this is the exact same. So, let's say you'd enter like this. Boom. There's your entry, right? Simple as that. Right? Entry, your stop is at the low, wherever you end up entering, and you look to take it up. That's an entry criteria, okay? Now, this is the same as, let's redraw this candle. Here we go. So that's the exact same first candle. But now the second one, we're going to make it a little bit interesting, okay? Let's say you get something along these lines, okay? These two things are actually exactly the same. This is what fractals look like, okay? So this is a down candle. Just envision this for a second. This is a down candle, and this is an up candle, okay? So now, taking along here, this is the exact same trade. Exactly the same. And both are just as valid as the previous. Okay, because they both represent the exact same thing. Okay, in this one, you had this candle that came below and then closed here. And this one, you have a candle that came down, closed below, then the next candle opened, came up and closed here. Right, so what it's done, if you fractalize it, these two will look the exact same across any time frame or across a few different time frames, right? Because the down candle plus the up candle on another time frame is going to be what? What is these two things going to make? They're going to make a wick. That is this wick, okay? This wick here at the bottom is the same wick as this one. It's the same setup, okay? So this is the idea of a triple M. It's confusing. I know if you're new, this is going to be very confusing, but over time, when you really start to understand what this means, especially if you've worked through the private mentfx mentorship, which is over 180 hours. Yeah, it's that long. That's how much more private stuff is available outside of this public domain. But that is what a development of a skill is. I'm going to give you guys one psychological thing right now. We take about 22 to 23 years, based on who you are, to go through school. Elementary, middle, kindergarten, elementary, middle, high, college, all that fun stuff. To get the kind of job that you normally would get out of college, that most of you are studying to get, that is going to pay you anywhere from about 40K starting up to 90K at the very highest level starting, 40 to 90K a year starting. You took about 22 years of your life to get there, which there's nothing wrong with this. A lot of people think this is a bad thing. It's like, there's nothing wrong with it, but it's really important that you understand this. A lot of you in those spaces or in a job that you're currently working in or a skill set that you currently have, a lot of you took, let me make sure this is still recording. Okay, that's good. A lot of you took, that approach. And that has taken you about 20 years to get from where you were to college to now your job, about 22 years. So in 22 years, you learned a skill set that is rewarding you at entry level, anywhere from 30 up to 90K at the highest, or in a small thing, and maybe even higher. Who knows? We're just going with general averages. The general average is around 50, 60K. So you did about 23 years for that. Now, a lot of people, when they get into trading, are sad when within the first month, first 2 months, first 3 months, first year, they haven't found utmost profitability and full-on clear understanding. Now, what's funny is most people in my course, actually every single person in my course that has finished the course has usually taken under a year to finish it. So it's usually been finished within 5 to 6 months. And once they've done that, they've had a full understanding as to what is expected of them. And then the real grind starts, because then you have real things you want to focus on that you need to start to perfect, like things like what I'm showing you right now. So for a lot of you watching that are like, this is so confusing, it's weird, I don't like that, I don't understand it right now, how is this fractal, what is this weird shit? Recognize that a lot of you, based on who you are, have already spent over 20 plus years of your life looking for a skill set that is currently rewarding you anywhere from, I'm guessing, 30 to 90K a year, and potentially much higher than that based on who you are. Maybe you're a coder, a higher end coder, maybe you're a doctor, whatever it might be. Some of you are doing much better than that, and that's fine. There's nothing wrong with any of this. I'm just pointing something out to you. But it took you 22, 21 years to get there. Now, I'm not saying trading is going to take you 20 years to become proficient. That's complete nonsense. But I am saying that if you think that this is an easy little market that you're going to be able to figure out overnight, and just because you saw this video and saw my explanation of a triple M, you're going to be able to go and fucking run circles around this markets like you're like in a bull race and you're just like with a red flag, like easy money, you are out of your mind. You are out of your depths, and this industry is so far away from what you're ever going to succeed in if you think that way. So recognize it's going to take time, and recognize that, yes, this is going to be confusing, but that's part of the game. Confusion is a very important part of learning. Confusion breeds questions, and questions breed answers, and answers breed confidence and experience building. And those things breed edge creation, the process, and then being able to consistently execute that process forever. So this is what a bullish triple M is. And this happens across all time frames, and it's a fractal understanding of what's occurring. And what you can do is, in anticipation of this, you can be a buy stopper, like say at this level. So as you buy stop this, right? So the candle starts climbing, it buy stops you in, and then it might take you out and you might lose. That's fine. That's part of the game. I've taken losses like that as well. But what can happen is it can buy stop you in, and before this candle even closes, it could close up here. So now, even on the first closure of this candle, you're in profit of around 1 to 4 RR. And at that point, I'm already taking a small profit off at 2.5 usually of 80%. And then you're looking for the rest to keep running. This is what an anticipatory or fractal triple M is called and looks like. And that's the execution that I'm teaching you today. This execution can be used close to anywhere. Any low or high in a market is going to have this occur at it because fractally, it's always occurring, right? When you look at this here, if you sell stopped below this low here, so if you sell stopped right here, this is the exact same thing occurring. And your stop could go here, above that high, for the same reason, right? Price comes above, price is here. At that point, right, this is its own wick. At that point, this is its own wick right here on a higher time frame, and this is now the body reaching back under the previous high, making that a triple M, and then you get the move down. And this happens absolutely everywhere, which is why it's very important that you have a confidence interval behind what you're looking for, context behind what you're looking for, and then you execute when everything is clear to you and you're willing to take that risk for the potential reward. So back to the original point here. We have the S&D 2.0 buildup. We have the expectancy, and it's very clear in regards to the higher expectancy, which is already delivering, right? And as a result, as price comes down into that S&D, I'm already on the charts, right? As price comes into this S&D, you can see where my long was taken. As it was making that black candle, I set up a buy stop above this low, just above it. You can see where my buy stop is set up. Just above that low, just above that previous low is where I put my buy stop. Why? Because as this candle is bearish, which it was, as it becomes bullish and gets above there, what it's done is it's left behind the wick and has now created a body that could close or potentially will close, as it did here, above this previous candle's low. AKA showing absorption has occurred, weak to strong hand has occurred, and it's happened in the area I was expecting it to happen in, within the context that was just shared with you, that was also shared for months upon months for over 20 hours straight in the private mentorship, which you're able to go and check out right now or after this video. So that's the entry I'm already in. My normal management on these is to take off 80% at 2.5. This was actually something I took from one of my members in the private mentorship. He did a lot of testing, a lot of data analysis, and at 2.5, taking 80%, he found extreme profitability. So I've started doing this as well because the data collection on it worked, and I was very happy to do it. And it was also, notice where the 2.5 is. The 2.5 RR target is within the next intermediary target, which is huge because it means I don't even need to clear the high to make money. Number two, it's within the context of the crazy, invalidation to context, and it's even within the higher time frames approach here as well. So everything is lining up in terms of wanting to see that bullish delivery. And now what we've done just by following this is, once again, we've transformed this invalidation point, right, to this. That's literally what we've transformed it to, and we've transformed our upside potential, right, to this. So you can see that even just to this high, we already have positive RR, but beyond it, to where we're actually looking for price to potentially extend to, the upside is close to unlimited, which comes back to the original thing we spoke about. What is it? There are multi-million to billion-dollar opportunities every single day, hundreds of thousands of dollars laying around for the taking based on who you are in these markets, based on your understanding and your ability to execute a specific set of rules. And if you can't execute them, well, then of course, you're going to lose. So 2.5 is what I'm looking for. Price plays around here, all good, nothing to do. Price reaches up in the 2.5, I take my partial. Now, this is something I teach privately, but I'll introduce you guys to it because I just don't have time to talk about it now because there's so many things to talk about. The way I manage these kind of entries, which can happen on any time frames, I'm using a 15-minute because it makes my trading easier. I've made a segue from seconds and 1 minute based trading to higher time frame. So 15, 1 hour, 4 hour daily over the last few months. And I think a lot of people are seeing that now shown in the industry, where a lot of spaces are now starting to transfer to higher time frames because, well, of course, as we showcase what can be done with the higher time frame, people are like, oh, damn, this is what can be possible. So many people are now transferring to those. But we've been working on these higher time frame things for a very long time with the mentorship. A lot of people have been doing insane things with them. And this is a model and a criteria for entry that can be used on any time frame, which means that scaling your account becomes a lot easier based on who you are and the time that you have available to you every single day. It becomes very easy to work around that time, whether you have a job, a hobby, another hobby, based on the sessions you might be able to trade, can't trade, etc. You don't have to be there on these 1 minutes and stuff. It's not important. Now, again, there's much more on this in the private. I'm not going to break it down here, but I made a bigger transition to trading on these higher time frames over the last few months, and it's been going really well. And I think that as I make this available and as I've made it available in the private, you're going to see a lot of the mentorships out there and courses out there transform to teaching a more higher time frame approach, because there's a lot of money in them, multi-million to billion-dollar opportunities, right? Hundreds of thousands available for the taking. So very simply, what I do is, as these bursts come in, which happen on all time frames, so this is why this is a management system that can work on all time frames. As the bursts come in, aka large candle moves, I move my stop loss with the low of the large candles. As simple as that. So I look to capitalize on big moves quickly and then get out. So sometimes this can even keep running, right? In this case, it came instantly back down, took me out, and that was a beautiful. So I made 2% on the. Actually, I don't discuss my personal earnings, but if you're risking 1% per RR, at 2.5, I take off 80%. So I took off 2 RR, 2% there. And then the rest got trailed, in this case, only at 0.55. So 0.55 got trailed. So I only made 2.11%. I mean, not only 2.11% on an account is huge, but again, you take losses now and then. It's just normal. This is not like a crazy addition to my bottom line, but 2.11% for the week, just on one time frame, just on what appears to be a tiny trade, is very, very good, because it's all rooted in risk management, right? So we take this, and again, if this kept going, right, because it had great upside potential, and it could have just kept zooming up, I would have easily been able to trail my SL as need be. And there's been trades that do this. I have full-on breakdowns and live trading videos available in the private mentorship. So you can check out, if you join up, live trading 14, 15, and 16 for examples where sometimes they run, sometimes they don't, just showcase that management. Because again, sometimes it's important to see examples in front of you to decide whether or not, or to understand like, oh, but what about this? What about that? What about this? So again, not every trade is going to be crazy. I'm here today showing you, literally showcasing a 2.5 RR trade. But again, you only need 2.5 RR trades like that to make millions of dollars. So don't forget that. Okay. But I'm showing you the thought process that goes into taking a trade like this, recognizing how you create opportunities of confidence for yourself, and then of potential RR availability, and then you take them, right? Because the potential RR on just this delivery here is already over 1-4. And that's rooted within a higher invalidation to confidence ratio, which is even bigger, which is rooted within an even higher invalidation ratio to confidence interval. That's on even a higher basis. That's not even delivered yet. And that's all using a system that can get you in close to anywhere in the market based on the kind of RRs that you want to get in at, or the kind of, large stops that you want to get in at across timeframes, fractal. So this is where I took that, right? Exact same. So these two right here are the exact same as this entry here. The exact same thing. That's what I'm just showcasing you to here. So, and again, you just flip that for the opposite side. It's as simple as that. That's what you're looking for, right? So you'd be sell stopping here, sell stopping here, sell stopping here, where you saw me sell stop just below that low. So hopefully, if you made it this far, you're able to add another tool to your tool belt, understand how important this idea of fractal markets are, understand that what we do is transferable across any time frames and any markets. Because again, I've taken trades like this even on a 4-hour and a daily. I even have back tests in the private mentorship where I showcase this on just a daily chart, where I would just be taking it. Actually, in one of our webinars, so the webinar that was made on the 26th of February, before market opened, I told the group on this day right here that we're going to come and take out this low, and as we take it out, that'll make it a triple M, and you can buy stop somewhere above here for a trade. And many people in the group took this, and just the first day of price action, 24 hours later, their trade was up 1-5, then it was up about 1-10 during the week, and then people trailed this accordingly to here, then to here, then to here, to that low, sorry, this low right here. Wait, where was it? Yeah, that low. And then they got stopped out around here with partials that they took anywhere higher. But again, this was fully broken down as well, and the reasoning behind it. And that was the same thing. It's the same model right here. This model is the same one I just showed you guys on that lower time frame, because this model happens across all time frames everywhere. It's a very powerful model, but the most important thing is recognizing that you should only be executing that kind of model in these kind of sizes of contextual application. And then you can execute that. And again, when you do that, what you do is you turn this whole thing into basically close to this, right? With that being the upside. And that's how you create really good trades for yourself, where you're willing to take on the risk for the potential reward. And that's how you begin to make money and do it consistently over time. And that's how you then go and get funded with mentfunding.com. That's how you start killing it on the charts. And that's how you then go and message me in the future, maybe 8 months from now, a year from now. Maybe you join up with my course and you message me and you go, holy shit, I thought I was getting proper education, and now I'm actually getting education and I'm able to build an independent way of thinking about price that I haven't been able to do before. And that's all I want to do as a mentor, is get you to the point where I get to hear that and I get to see you succeed. So I hope you guys took a little bit of something today from this video. I hope you took a little bit of thought process from it. I hope you learned a little bit of an entry criteria that the world does not know about. I hope you understood that fractals literally mean fractals, and that what we do is available across all time frames. I hope you understand that multiple $1 million to $1 billion opportunities are available every single day, so you can get rid of some of your emotional problems and qualms. I hope you stop trying to force price to go in the opposite direction, especially when it's delivering continuously. And I hope you realize how the industry is about to evolve thanks to the way that the mentfx methodology is now shaping the playing field. All right, guys, thank you so much for watching. I hope you enjoyed it, and I'll see you all in the next one. Let me know down below if you enjoyed. Leave a like, a dislike, whatever the fuck you feel like, and I'll see you all in the next one. Bye.